Huge spike in Fed bank bailout program, a worrying sign for the banking system. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Crypto, and the Gold and Silver Standard. Today, welcome back Branko to bring us up to date with the latest developments in the Bank Term Funding Program, which is something I know he's been following very closely. So how are you going today, Branko?
Good, good. Keen to talk about today's topic. I know we love bank collapses here, so some more bank information coming our way.
Well, you've certainly been talking about it for quite a while because this was really a story from much earlier in the year, and it seems to be rearing its head again. So, can you maybe start us off today by talking about, or maybe give us a bit of a definition of that bank term funding program, why it was established, and why it's relevant again today?
Yeah, so just a brief intro. This bank term funding program was established by the Fed to basically give loans to banks that are in financial stress. And it was established during kind of the collapse of SVB. They're like, we want to reduce the chances of happening again because of the chaos. So let's establish this program where banks can get kind of loans to help out. So that was its intended use, but as we'll discuss, it might be being used for different reasons. And yeah, it was established in February, and I think it's just something interesting to follow as it'll give us an indication of the health of the banking and financial system as like an indicator for the future.
Right. So, like as you said, it was really there on the back of that Silicon Valley Bank, the uncertainty around those regional banks that was happening at the time.
Yeah.
But we've seen a spike again this month, which is what you were highlighting in the news piece today. So why is that relevant, and why is that so important?
Yeah. So the key point with this is, this we saw a big $5 billion spike when there's absolutely no reason for there to be a spike. So, if we look at the more long-term chart, we'll discuss a bit later, you see this, very big increase in loans during February, which is when it was established to help out all these regional banks that were kind of caught in the contagion effects, which we discussed a lot about. But why is it starting to move down again? And why is it kind of a continued downward slope? There's no reason these banks should be in financial distress. In fact, their bond portfolios, their valuations would have gone up. So they would have been like a healthier financial position, most likely. So why they need these loans unless there's a structural problem with the banking system, which I think this highlights if the trend is we need more money and there's kind of no macroeconomic reason or any interest rate reason for them to require that.
And yes, that is a good point, because I know it was certainly a concern when we had yields spiking and bonds collapsing. But as you just pointed out, over the last sort of month or two, that's been easing to a degree. Bonds have sort of found a base and have been moving back up a little bit. Those yields have come down. So that should be the scenario that's allowing these regional banks to unwind those positions effectively, to be feeling quite comfortable. They shouldn't have to be sort of doubling down and heading back in to use that program even more. But I mean, you also highlighted this. I think there's not really, well, it certainly wasn't clear to me at the time that there was any restrictions around the use of that program for those banks. It was really an opportunity to unload their long-term government debt that wasn't performing. So, there could be other reasons why they're using it, but I completely agree with you. It's concerning that we're seeing that happening more so right now, because right now would seem to be everything relatively smooth sailing. So do you think, leading that to a question, I suppose, do you think that maybe this is indicating something, that there's longer term trends in the data there of what you're seeing? Is that telling us that there's something bigger going on behind the scenes?
Yeah, so I just think like I said, the spike down that we saw with the SVB situation makes sense because depositors are pulling out of regional banks and the smaller banks, they're scared. So it makes sense they need loans. But the fact that, again, it's just continuing to go down with really no end in sight in terms of, I mean, if the situation should be pretty stable. So basically what I'm seeing in the data is that, the banking system is fragile and there is something wrong with it. And then this isn't, I'll probably get into shortly, but like as far as this being a solution, it's a lot more complicated than that. It doesn't really solve much, just potentially could delay the problem down the line. So this downward trend is concerning, and that they're taking more and more loans out. That is something to be worried about, particularly in the current climate.
And that is something that I think people or commentators who were critical of the program at the start were concerned about, is that it ultimately might not have been a long-term solution, that it really was more of a short-term band-aid. Is that how you see it here? Do you see that potentially, I mean, anytime you implement a program like this, you can have unintended consequences from the program itself that create the next round of issues that need to be resolved. So how do you see the, I suppose, efficacy of this overall in actually solving what it was intended to solve?
Yeah, I think it's not going to solve it. It's absolutely a short-term band-aid, and furthermore, probably just increases like income inequality, if anything, and business like inequality with banks, because banks can just continue to get money. Like, again, clearly there's no reason for them to have this spike, and they're still getting the funding, and that funding isn't going to any individual citizen. It's going to these banks that have these probably highly risky balance sheets. So not only is it a short-term band-aid, but if anything, it could further worsen it, because they see this as an opportunity, as like an additional credit source. So maybe we can take more risks now with our assets because we've got this backup. So if anything, it could actually just worsen it long term, while I guess helping in the short term. But at the end of the day, the cars have to come crashing down at some point.
Yeah, and that's something that concerns me a little bit as well. This idea, and we've also seen it with, well, what I've been referring to in sort of the things that I'm looking at as the government deliberately choosing to fund its debt at the very short end of the like the all available options it has to it. So I feel that that's been really kicking the can down the road as well, because when they and we commented on this on Insights when this happened not that long ago, sort of within the last month, they tried to issue debt at the longer date, and that issue just failed, right? Like they just couldn't get that debt to be absorbed by the market because the buyers have dried up. You don't have foreign banks who are prepared, or foreign governments who are prepared to take on large amounts of US government debt. You don't have the demand locally to do that. So that's a similar program in my mind, that they sort of went, well, we'll just issue lots of really short-term bills, less than 2 years. But ultimately, they need something much longer than that to make the debt sustainable. And if when they try to do it, it just doesn't work. So it feels like that might be the same case here, that if they don't offer programs like this to sort of band-aid over it, as you were describing, that it really could blow up quite quickly because there's nothing there. Like I've heard it referred to as the Wile E. Coyote moment, where that he runs off the edge of the cliff and there's nothing beneath him. So these programs seem to be like they're the only thing supporting the market at the moment. Is that a summary that you would agree with, like in terms of these programs?
And I would also say that it's interesting you say it's almost a continuous, like just short-term band-aid after another. I think that makes a lot of sense when you consider that no government or no organisation wants to have some chaotic moment under their watch, and so they're incentivized to just kick the can down the road, even if it means a worse thing at the end, because when they might not be in the position to have responsibility over it in the event that it happens. So I think it kind of makes sense that, especially in the political climate that we live in, that this attitude of just, and I think it's very obvious in terms of how the debt is handled as well. Just keeps, like with the debt ceiling, let's just keep raising the debt ceiling, raising it, doesn't matter. Someday we'll pay it. And eventually someone has to cut the brunt of it, but as long as it isn't our government or our people in charge, we're safe from the scrutiny associated with it. They're going to look at who actually the chaotic event happens under, as opposed to the policies that led to it.
And that's fair, because the public has a very short memory when it comes to these things, and we do tend to blame the person in charge at the time, despite the fact that really they probably had very little to do with it. It was the lead up that could have been happening over the decades before that really caused it. That's a really good point.
Yeah, I think so.
Yeah. Okay. Well, thank you for that today, Branko. Lots of insight there into what's going on. I know we'll continue to pay attention to that. You're always looking at what's going on with those banks. And yeah, it is a bit concerning that we're seeing so much action when everything is really relatively calm. So it really begs the question of what it's going to look like when they start coming under pressure again. But no doubt you'll be have your finger on the pulse and be able to keep us up to date when that happens. So thank you for that.
No worries. Thanks, Chris.
Thanks everyone for watching. Remember, reach out with any questions or comments on those social platforms. That's us for today. We'll be back tomorrow with Sam to discuss all things markets and metals and crypto. Until then, have a great rest of the day, everyone.